All right, good evening, everyone. This is Ajit Mishra from Religare Research, and we are back with yet another session of Week Ahead with Religare Technicals. So, as you know, that we talk about market performance, we talk about sectoral performance, and top performing counters from the Nifty 50 basket, and what to anticipate from the key indices, both Nifty and the banking index for the next week, and some of these stocks also which looks positive and negative to us for the next week. So let's get started. So before that, a quick disclaimer that through this webinar, the idea is to share the insight that what we are anticipating, what we are seeing based on the technical readings that we have on the graphs. So it's not a trading or investment recommendations. So we are just sharing our observations. So before making any trade or investment, please take advice from your investment advisor. Now, talking about the indices first, both Nifty and the Sensex, after 3 weeks of successive decline. So finally, we saw that index managed to recoup some of its losses. Though the week was extremely volatile, it was a holiday shortened week. And initially, the start was not that very encouraging, but gradually we saw that index managed to recover decent from the lows and gain nearly 1.5% each. And talking about the sectoral performance, so it was media, IT, realty, IT, and the banking index, which helped the index to inch higher. Defensive from the space, FMCG witnessed some profit taking, which was leading, earlier and ended in a red. Talking about the Nifty 50 stocks, energy counters and metal counters were among the top 5 gainers. So it was Coal India, ONGC, among the top 2 gainers, and then we had JSW Steel, Hindalco from the metal space, and lastly on the list, Titan, with a very strong up move that we have seen in today's trade. Talking about the losers, it was the auto counters, which was more of like profit taking, and similarly in the FMCG space, from the auto space it was Eicher and M&M, and from the FMCG basket it was HUL, Tata Consumers, and Britannia. So it's more of like a profit taking. I won't say that this decline would reverse the trend in some of these big names, but yes, this is how the market ended. Now, talking about the index, the Nifty index first. So if you remember that last time we discussed about the importance of 16,800 level, that this green line should act as a critical support. We breezed that market briefly. In fact, this long-term average, this red line, we breezed both the critical support for brief, but in the very next session we rebounded very strongly and reclaimed both the support areas and witnessed this rebound. And the first resistance was 17,400. This was the line that we marked earlier. So it managed to surpass the same intraday, but it couldn't sustain. And finally, we saw that closer to around 17,300, we have finally ended. So what to anticipate next? So for that, we need to have a brief background, what is going on in the global market. So the recent dip, this decline from 18,100 to 16,800 was largely due to the profit taking in the global market, especially the US markets, which made a new low. Because in our markets, these were the levels that we have tested in the month of June, but the US market have breached, June lows. So that was the reason that we were seeing a jitter in our markets. At the same time, the FIs were also back on the selling speed. So all these factors led to this, decline. And in this recent rebound, we have seen in the last couple of sessions, the US market have also rebounded. So we are largely, trading in tandem with the US indices. But now what is the way forward? So there is no clear indication from the US market whether this move is going to sustain or not. So the idea is comparatively, we are still in a better position. And as long as, 16,800 positionally we are holding, the possibility of, consolidating with the, a positive bias would remain high, from the weekly and fortnightly perspective. Intermediate, yes, we have 17,100, which is the immediate support, this, green line. And upside, again, 17,580, this trend line resistance, closer to around this area would be the first resistance, and closer to around the upper band of this consolidation range, 17,900 is what we are eyeing. So broadly, the tone is positive, but the momentum is missing. And for that, we need to have sustained recovery in the US markets also. At the same time, the earnings season also is going to kickstart, soon. So that would also remain a key focus area for the market. But as of now, is the global clues which is dictating the trend. So just to understand where are we now. So as of now, we are comparatively in a better position, but for any sustained recovery, we need support from the US markets. So maintain positive tone till 17,100 for a very short term. If you are a day or two trader, means those who look for like a very short term trading opportunity. For positional traders, 16,800 is going to be the critical support area. Now, let's talk about the banking index. So banking index, after retesting the record highs, this, close to around 42,000 levels, this decline was severe because initially it was like, the indication that we might not see this kind of sharp decline, because usually what happens is that after, retesting the record highs, and if the trend is positive, it should hold, around the previous, consolidation lows or the support zone. But it breached decisively that mark also and drifted towards the 100 days of exponential moving average. And from there, in line with the, benchmark indices, Nifty, we have seen a very strong rebound in the banking index also. But comparatively, even if we have seen this sharp decline from the top, it's comparatively stronger. This structure is comparatively stronger if we compare it with the Nifty Index so far. And we feel that one should continue with approach of accumulating. Last time also we talked about the same, that instead of like looking for short positions, look for accumulating quality private banking names, those who are outperforming within the sectors. So stock like ICICI, stock like SBI, they are trading at the record high. So we believe that the outperformance which these stocks have started with the recovery in the market, it will continue. The second rank stocks like IndusInd Bank, we have seen a very strong rebound and sustained rebound finally after a long period of time, followed by Axis Bank, something that you should trade accordingly. And lastly on the list, SDFC Bank and Kotak Bank, they are the one actually they are not participating and they are still the laggards. So the idea is to stick with the top performing names like ICICI, SBI, and Federal Bank also falls into the same category. So these are the names which one can continue to look to accumulate during this dip instead of looking for shorting position. Because of late, yes, we have seen a marginal decline in the PSU banking space also, but the recovery is equally strong. So look for buying opportunities and with a positional view of at least 1 to 2 weeks. Talking about the index, so 39,850, this red line is going to be the first resistance area, and then the next resistance could be closer to around 40,350 area, the breakdown zone from this consolidation pattern. Similarly, on the downside, this 38,700 and 38,000 would act as a support. And why I'm saying 38,000, not this lower band where it tested, because we have multiple support that it retested that area multiple times and rebounded. And in this case also, in this decline also, it didn't sustain for long below this mark. And the next candle after this strong, up move on Friday, the next candle, it took support around the same level and then rebounded. So the importance of 38,000 would remain high. Obviously, this long-term average is critical, but 38,000 and 38,750, that would continue to act as a strong support area. So in banking index, look for buying opportunity. Even if we see some consolidation, it looks comparatively stronger, and possibility of testing 39,850 to 40,350 level is high. Now, since we have mixed trend within the Nifty space, though the tone is positive but momentum is missing, so the idea is to focus on stocks. So first stock that we have on a list is McDowell's. This stock have recently witnessed a channel breakout. It made an attempt earlier also, but it couldn't sustain, and now after retesting the long-term averages here, we are again seeing a recovery. So we believe that even if there will be any profit taking in the market, it might go sideways, but broadly this channel breakout is over, and we are going to see the stock gradually inching towards 940, 960 level in days to come. So McDowell's is one such stock that one can look at on the long side. Next on the list, a very strong candidate, because it's a prolonged period of consolidation and followed by a very narrow range of consolidation congestion that we've seen a breakout from. We are talking about Tata Chemical here. So you can see that it's a record high. The stock is trading at the record highs right now. So after a very strong up move, we saw a phase of consolidation wherein the stock hovered in this range of around 1150 to 800. It made an attempt to break this consolidation, but after the initial attempt, it again witnessed consolidation, means a very narrow congestion range that it formed. So as we were discussing about banking index, that usually after retesting the highs, that the stock or the index should not see any major decline in case if the strength is there, and that is what we saw in the Tata Chemical space. So we hardly saw any price-wise deterioration in the stock while it was consolidating. And finally, in this week, we have ended with a very strong green candle. So that indicates this consolidation is over now, and this stock is set for a next level of up move. So McDowell's and Tata Chemicals, both these stocks looks very strong to us from a long-term perspective. Now comes candidates which are not so strong, wherein we may see underperformance or maybe a possibility of fresh decline also. So the first on the list we have Gujarat Gas. So in fact, all the gas distributors stocks we made saw that they made an attempt to reclaim their previous swing highs in some cases, and in some cases they were trying to reclaim their long-term averages, but the attempt failed. So similarly in Gujarat Gas, after this corrective phase, it tried to it managed to cross this trendline hurdle, but it couldn't sustain above the long-term averages. And again, now we are seeing that it's drifting lower. And in case if it fails to hold this trend line, then we might see further decline in days to come. So the idea is, even if we might not see a major decline from the current levels, but the outperformance or maybe this underperformance would continue. So in case if you get the shorting opportunity, Gujarat Gas could be the candidate which one can consider. And lastly on the list, Indigo. So Indigo, for the same reason, negative trend intact. Of late, it made a couple of attempts to cross this trend line, and after the failed attempt, it witnessed a fresh breakdown, and now it's trading below all its major moving averages. So broadly, if you see that the stock has been hovering in this band, close to around 1600 to 2021.50. So indications are in the favor that it might drift further lower and retest those areas. So it's not a clear-cut short, but yes, comparatively, as we were saying that in case of Gujarat Gas also, that the stock is likely to underperform. So in case if you are not shorting these stocks, one should not buy it. So avoid buying in Gujarat Gas or any other gas distributing names. And similarly in the Indigo also, you should avoid until it reclaims this level of around 1900. So yeah, with this, the presentation end, and just to sum it up, so for Nifty, the bias is positive, but the momentum is missing. So for that, we need to have a clear view on how the global markets are approaching, plus the earnings season also. So all these factors are going to be important. But in the meanwhile, since the tone is positive, one should look for buying opportunity across the sector, but in the top performing name. Similarly, in the banking index, it looks comparatively stronger than the Nifty index, and preference should be given to the top performing counters like ICICI, SBI, Federal Bank. On the stock specific front, for the positive side, McDowell's and Tata Chemicals, these are the two names which looks very strong to us. And similarly, on the short side, Gujarat Gas and Indigo, they have a comparatively weaker structure. So yeah, with this, the presentation end, and can we have the quick poll, please? All right, so please quickly fill this poll so that we can start with the Q&A session also. So once you are done with the poll part, you can start putting your question in the Q&A box. So please don't use the chat box, use the Q&A button and post your queries there. Strict your questions to the sectors, to the stocks that we have discussed, no individual stock specific queries, please. Please quickly fill this feedback poll so that we can start with the Q&A session. All right, in the meanwhile, in case if you're done with the poll, you can start putting your question in the Q&A tab. Okay, let's get started with Q&A session. Okay, so Mr. VN have asked, so can you please also discuss about the market scenario for the next couple of years and sector-wise performance also? So it's Mr. VN, through this webinar, we try to gauge what is holding for the markets for the very short-term perspective. And for the long term, we come out with multiple reports for the long-term view on markets and the stocks. So if you are associated with us, you can connect with your respective dealer or your business partner. So they'll help you out with the respective report so that you can understand what we are anticipating in the market for the long term. So Rakesh Kumar Sharma have asked for like the finance sector short-term view. So Rakesh, as we were discussing about the banking space, so largely the banking and financials are trading in tandem, and the majority of the NBFC counters, they are still, witnessing lackluster moves. So except you exclude few names like Bajaj Finserv, means the Bajaj twins, and I can't recall any other name which showed any decisive move, because Muthoot or Manappuram from the gold financing part, Shriram Transport Finance, M&M Finance, all these stocks, either they were like trading with the sideways bias or witnessing correction. So except this Bajaj Twins, I honestly can't recall any name which one can look at from the short-term trading perspective. So the idea is, in case if you're looking for bets on the NBFC space, stick with the Bajaj Twins. Ankit have asked, so should we avoid shorting index? Yes, the answer is yes, that you should not look for shorting opportunity until unless we are holding above 17,100 mark, if it's a short-term view that you are taking on the markets. Okay, so Mr. Ketan Mehra asked regarding that generally in Diwali, the market witnessed upside and swing, but that could not be the scenario this time. So as of now, indications are mixed. You are right that if you go by the history in 10 years, there were hardly any occasion that the market ended in red from the period of Navratri or Diwali. But this time around, situation is different, and obviously it's always a new day or a new market. So that is what we are seeing right now. But one should not look at from what has happened in the past, and based on that they should make their investment. The idea is to stick with the top performing counters, and even if there could be some volatility which might continue during this period, but broadly we are comparatively stronger structure, and I'm not seeing any major reason to worry until unless we decisively break 16,800 levels. So it's a silver lining that despite the negativity that we are seeing around, we are still in a comparatively better position. So Golapalli ji have asked, may I know the holding period? See, it's a very short-term perspective that we are keeping in for the stocks that we are sharing. We share 2 stocks every week. So for Tata Chemicals and McDowell's also, we are anticipating that the move should happen in next week and in the next 15 days. So the idea is to continue with a positional approach for the next 2 weeks. Okay, finance sector view we have already covered. No individual stock specific queries, please. So Abhay, short-term perspective we have already shared, and from the 6-month perspective also we feel that the tone looks very strong to us, considering the stock is trading at the record highs. We have seen a fresh breakout after a long period of consolidation. So even if your view is medium term, you can continue with Tata Chemicals. Yes, next question is from Mr. Praneet Chauhan. So what about pharma sector? So pharma sector, it's something important that he has asked, that after spending nearly a year in corrective phase, we have of late seen a breakout or a trend reversal in the pharma space. But not all these stocks are performing in line with the breakout. The top names which are leading from the front are Sun Pharma, Cipla, and Torrent Pharma. Then we have other stocks wherein we have seen very strong traction, Zydus Life, Glenmark. These are some of the names where the momentum was very strong of late. But at the same time, Divis, Dr. Reddy's, Biocon, they are still really under pressure. So if I have to choose among all these names, again I would stick with the top performing names, stock like Sun Pharma, Torrent Pharma, and Cipla, because they are already at the record highs, and in case if there be any trend reversal, decisive trend reversal from here on, the leaders will continue to lead. This is what the indications are. So Sneha also had similar queries, so we have answered. So 17,800 is not a big deal, Prince, if we consider the kind of volatility that we are seeing in the market right now. So yes, this possibility is still there, and as you said that above 580, 17,900 is what we are eyeing. So Mr. Rajiv Kumar have asked about energy and FMCG. So FMCG, the overall tone is positive, but now we are seeing a bit of profit taking. So one needs to be selective in this space, because stock like HUL, ITC, Britannia, Marico, all these stocks are witnessing a bit of profit taking now. So do maintain stop losses in these names also, though they are very strong performers. But if the view is short term, we might see further deterioration. Dabur, we have seen fresh weakness, so do maintain stop losses. Trend has not reversed yet, but yes, the kind of momentum that we were seeing, that has definitely fizzled out. Yeah, and for the energy space, power space, it's a mixed trend again. Tata Power, we are seeing recovery. NTPC also, we are seeing a bit of rebound, but Coal India was like among the top performer, as we shared during the beginning of the presentation itself. So yes, we are still seeing some of the energy counters doing well. At the same time, OMCs like HEL, Npetro, BPCL, IOC, they are still witnessing pressure on every rise. So avoid OMCs for a time being for the long side. So Mr. B. Sunil have asked about IT pack. So IT, yes, in line with the recovery in the US markets, we have seen a decent rebound in the IT index also, and the beginning of the earnings season starts with the IT pack. So obviously they would remain in the limelight, but comparatively from a trader perspective, I would rather prefer like some of the mid-cap IT names wherein we are not seeing any excessive volatility. The stock like Persistent, it looks very strong. Stock like LTTS, a stock like Emphasis, they are comparatively better structure, and wherein the volatility is also low, at present. So, but do remember that with the beginning of the earnings season, we expect the volatility to rise, and based on the commentary of the management, we'll see the reaction in the IT counters. At the same time, in case if there will be any fresh decline, in the US market, again, we might see the IT stocks fizzling out. So IT is still vulnerable from the perspective of global perspective, and one should be very selective in this space. And Persistent, Emphasis, LTTS, they are some of these comparatively stronger structures. So, Mr. Gagan Gaba, I'm not, predicting trend reversal. We are just, at least I am into trend following. So, as of now, there's no indication that we are inching towards 15,000 or maybe lower. So, as of now, the indications are that 16,800 is the key make or break area. As long as we are holding with the same, possibility of Nifty inching toward 18,000 or maybe higher would remain high. So, Mr. Rajesh Kumar, we have answered your IT-related query. And metals. So, metal, Mr. Patel, we are seeing mixed trend within the metal space. So, Jindal Steel is leading from the front this time around with the rebound. Earlier, it was the JSW Steel, which was among the top performer, but now slightly in the back foot. So we are seeing mixed trend, and I'm not very convinced about the recovery that we are seeing. So for a timing, at least one should avoid middle space for long trades. So Daulat, as we are discussing that, banking, yes, it looks strong, but extreme out of the calls is something that one should avoid. And one should stick with the trend and prefer with ITM and ATM, options, especially if you are trading a recovery. So though it's not related to the webinar, but it's an important question that Mr. Yashudru Tharu have asked regarding the investment through in the index fund. So index fund is anyways should be the part of investors portfolio in case if you are a passive investor and you don't have much time to actively trade and invest into the market. So index fund can definitely be considered, and it should not be like a one-time phenomena. You should rather look for investing through SIPs. And whenever you see a market correcting 10-15%, the index correcting 10-15%, you can add lump sum, on those declines. But otherwise, maintain SIP. You can definitely consider any index fund for investment. Okay. So Abhijit, Maheshji, we have already answered regarding our view on markets. So we are not going to repeat. Cement stock, Nachipan have asked regarding that, how the cement stocks are likely to perform. So we, again, in the cement space also, we are seeing mixed trend. So Ambuja, ACC, we all know that due to news, we saw almost a vertical rise, and now we are seeing a correction also equally strong. So apart from these two names, sustained move like Grasim in the short term looks strong to us. Ultratex is still struggling to reclaim the resistance area. Ramco is also witnessing a similar kind of move. So there is no clear trend in the cement space so far, but comparatively Grasim is a better structure. So yeah, with this we have answered all the queries, I guess. Yes. So thank you everyone for joining in, and next week same time at 4 o'clock we'll connect again. Till then, take care. Thank you.